So the financial statements, what are we going to do with those? One thing we're going to do in the United States is use them to create our taxes. So whether you're a corporation, a partnership, a sole proprietorship, you're typically going to have income taxes typically, right? And you're going to need at least the income statement because that's going to be the performance form. We have an income tax. The income statement is the performance, how much income or net income you generated on which you will have the tax, which is the form Schedule C in essence with a sole proprietorship. Larger businesses will need a balance sheet too. Now note, just because you just have the income statement, you might be saying, well, why would I need the balance sheet then? Why do I even need QuickBooks? I have doing twice the work. I got a balance sheet and an income statement. I only need the income statement. Well, you want to have QuickBooks because if you try to do the income statement without the balance sheet, you're not using the double entry accounting system. So even if you don't have to report the entire balance sheet, you want the double entry accounting system, which is in essence the balance sheet, because that gives you assurance that your numbers are at least more likely to be correct. If you do a bookkeeping system like QuickBooks forcing you to be in balance and you double check cash, which is kind of like the lifeblood of the company, cash being the veins that takes that blood through all of the cycles. So if that's healthy, you can have some general idea that the overall business is healthy. Now, you also might want the financial statements, of course, for internal decision making. That's how we decide what we're doing, have our budgets in place so we can trim down and be lean and mean in our business from a financial perspective. But you also might need the financial statements for external reporting. For large publicly traded companies, that would be for the shareholders and so on. You'd be required to report that according to like generally accepted principles and so on and so forth. But for small companies, you might not be in a public stock exchange. So the question is, why do I need that information? Well, at some point, businesses might need it because they might need more capital to grow, in which case they're going to need a loan, which means they're going to have to report the financial statements to the bank, or they might want to take on other partners or investors and so on as equity interests in the company, in which case they're going to have to attract them with the financial statements. Now, notice,